from Good. Thank you once again for joining us. You're welcome, everyone. We trust that you've had a good productive week so far. This is midweek now, so let's see what the markets are giving us. And like we like to always say, you must always have a process to your trading so that you are not just trading um, haphazardly, right? You must have a process to your trading. That's very important. And to help us with that process, we came up with, actually, I got this from one of my mentors, right? Who said there are three basic questions you must always ask yourself, no matter the process, the trading system you use. There are these three basic questions you must always ask them. And the third one is even more important. So the first question is, what did price do overnight? So first question, what did price do overnight? You're looking for, is it a trend or is it a range? And then you need to identify where is price now. And this question, this first question helps us to understand direction. Which direction do we think has a potential? So we're looking at, when we are trading, we're looking at probabilities, right? So we're asking which direction has a potential, is more likely for price to go through for us to then take a trade. So what did price do before we got to the charts right now? So your overnight could be Asia session, your overnight could be New York session, your overnight could be whatever session for that day before you started trading. That's your overnight, right? Then where is price now is the next question. And then the third question is, what must I see price do before I execute a trade? That is very, very important. What must I see price do? So that gives your mind a framework. You want to see price. So haven't answered if it's a trend or a range. If it's a trend, for instance, we are trading break of structures. If it's a trend, so if it's a trend upwards and we've seen a break of structure, then we expect a pullback and then for price to continue going forth, right? If we are trading rejection candles, then we want to see that rejection candle at that level, maybe an engulfing candle, right? Let's say this is a bearish engulfing candle. Then we want to just see a pullback and then we go back, go down with it. So depending on your trade process, you must always have a consistent process, a repeatable process that you follow, right? And that is the whole thing here. So let's look at our trade setups. This is gold now. Oh wow, this is a very nice setup we've just had now. Let me look at this. Ooh. Okay, so question, what did price do overnight? And I'm sure you can see it very clearly. Price started somewhere there, went down, came back up, broke structure here, right? So if you were trading, if you were awake at your charts early this morning, you'll have seen this break of structure right here. So once you see this break of structure, and then you ask yourself, what must I see price? So you say price is right here. And then third question, what must I see price do before I enter a trade? You see, it did give you a small pullback there. So you enter right there, and then you're looking for higher highs. And it's giving you that higher highs to this level. It's pulled back and then come back up here, giving you another break of structure there. So we can see clearly price is in a nice trend upwards. Okay. So for us now who are in the London session, we're asking what did price do overnight? We can see break of structures to the top side. Okay. This is the last break of structure. I'll just mark that one. Break of structure to the top side. Okay. Now, if I ask my question, where is price now? So price is right now at the 52.67 zone. Okay. Then question, what must I see price do for me to take a trade? So I want to see a pullback. So would it be all right to take a trade right now? Yes, it'd be okay to take a trade right now. Okay. Now, the next question will be, where would I put my stop loss? Right. So the question will be, to get where your stop loss is, where is the highest level? This is the highest level. Next question, where is the last opposite candle that caused this move to come up here? Right. Now, this is where your discretion comes in. So I'll just look backwards and look at where is my last break of structure. My last break of structure was right here. Okay, so I'll look for the last opposite candle from this break of structure, and it's right here, right? This is the conservative stop loss, right? So I'll say that if price then decides to come all the way down and breaks below this level, then I'm no longer interested in a buy. But I can take a buy right now and look for maybe possibly a 1-to-1. Okay, right. The other way is to say that, okay, I can see that's if you want to be very granular now and very aggressive, right? You say, okay, price came up here. You can take this. In fact, this actually is another this is the aggressive risk of what do we call it now? Aggressive entry for instance, if you like, right? If you're trading gold, you can say this qualifies actually as a breakup structure as well. This whole setup here. So price came all the way to this level, right? You have an opposite candle which qualifies, right? And then you have this push up. So you can put your entry right there, looking for price to just go up, and then put your stop loss right there. Okay, that's the aggressive method. So like I always say, there are 1,001 ways to trade this thing, but you pick which one is more suitable for you, right? Okay, so let me close that. So let's say, so all we're looking for now is for price to pull back, and it is already doing that, right? And the thing is that you never know how far it's going to pull back. Will it just going to pull back, just like this and then continue going up? Or is it going to pull back a lot more? Is it going to give you a bigger pullback and then go forth, right? We do not know. So you just take what the market gives you at that time, take the best decision that you can make at that time, and then move forward, right? So let me just mark that the conservative stop loss area. So this is my conservative line in the sand, right? And I'm looking for price to continue going up in this scenario here. Okay, right. Let's look at the next setup. What is this? This is pound yen. What is pound yen doing? Pound yen, this is a lot of sideways market. I can't see much here. It's a lot of sideways market. So the conservative person will just look at this and will just say, well, this is a high here. This is another low here. Okay. We'll say this is another low here. This is the lowest level it has done today, right? If you want to now be very granular about it, you say, okay, price started from here, went up. Oops, where is my, yes, went up, came down, went up again, right? Came back down here. You have a break of structure right there, right? And then it's pulled back in. And then you have a possibility that it's going to actually come back down here. But overall, when you really look at it, when I'm looking at this, in fact, and this is even a good lesson for us all. Look at, so when you're looking at this, right, and you say, okay, this is trending downwards, for instance, okay, what would you prefer? Something, a setup like this, or where is mine? Let's go to gold. SAUUSD. Look at gold. Can you see the difference? This is trending nicely. This is a trend, a very nice trend, right? So you can confidently say, okay, this is a higher probability setup that will probably give you, once it follows meets your criteria, this is a better setup for you to go long, right? So let's look at that one again. So you see, this one, my first instinct when I look at it is that, oh, this is just ranging, right? I don't want to even be granular. I don't want to be thinking, too much. This is ranging. So you can see clearly when it's a clear directional move, you will know it's a clear directional move. Once in the first 2 seconds, you look at it and you can't determine if it's really trending, just say range and just keep to that range. Okay. So let's assume this is range. So what do we want to see? We want to see price break these lows, right? And then we'll continue going down. Or in the other alternative, we want to see price break the highs, right? And then we continue upwards. Okay. We can even get potentially a market structure shift here because it's pulled back and it's already giving us a potential swing high there, right? So if it comes back and breaks this level here, that'll be a nice break of market structure shift. And in that case, we can then wait for that pullback and then go up with it. Okay, so there are 1,001 ways to take this trade, but just pick one and just follow it. Okay, just pick one and just follow it. All right. So in this case, I'll just default to range. I'm defaulting to range because I can't see any clear directional move here. Okay. And if you like, if you and like I said, you can decide that okay, this is a break of structure right here, and then that this is now a pullback, and then you're looking for price to come down. That's totally fine as well. Okay, but the thing is, you have to follow your process consistently. You have to follow your process consistently. That's the more important thing. Not necessarily, oh, where's my entry? Where's my setup? And no. Follow that process consistently in a repeatable fashion. So if you continue to follow that process consistently that way, that is where you begin to see the market giving you the pips that you're looking for. Okay, let's look at this other one. This is Euro Yen. Okay, this one too. In fact, I'll just default to range. So, okay, this was yesterday. So today's market, it went up a little bit. Give it a high there. Now it's giving it a low. So although this one actually you can see this one is showing a better sort of trend downwards here because you have a nice break there, right? It's showing a better stuff there, but it's just ranging really. Let me remove that. It's just ranging. It's just ranging. This is a big range. So what do we want to see? Want to see price push up to this level so we can go up with it. I want to see price push down and then go down with it. So, and I'm seeing something here. Remember, we have 3 setups. And when I tell us that we have these 3 setups, that means you can use any of those 3 entries. And when you're just starting out, if you have a very small account, just pick one of them, right? And I'm sure by now you know our 3 setups is break of structures, right? Market structure shifts, MSS, and then rejection candles. You can say to yourself, okay, thank you, Jeremy, for giving me all those 3 setups. I'm just going to concentrate on rejection candles, right? And if you're going to concentrate on rejection candles, you just come here and say, okay, price has moved all the way down, right? I can see a rejection candle here. And what's my rejection candle here? This is a nice engulfing candle. Okay, now with my nice engulfing candle there, I can say, okay, I'm going to take a buy because market has come down. I can see consistent move down. Okay, in fact, for me personally, I like to see at least 2 to 3, well, 3 consecutive candles, moving in one direction, and then you now have an opposite one that gives you either a bullish engulfing candle, well, let's say an engulfing candle or a kangaroo tail or a doji, right? So once it gives me that, so that is a setup. So in your trading session, you can have at least 3 different setups at the same time, or fairly, like this one now. See, if you are taking the method we teach, so price okay, this if you take this as a break of structure here, okay, and this thing, there's no right or wrong answers to this thing, right? There's no right or wrong answers to this thing. You just follow a process. Once you are consistent with that process, that is the key thing. You have to follow a process. Okay. It's like going to the market. In Nigeria, we have that adage that there are so many ways to get to the market. So whether you use the highway or you use the country route or whichever way, right? The important thing is that you are seeing those consistent progress. Important thing is that you got to the market and you're able to get what you wanted to get, right? That is more important, not whether, oh, my entry, this entry is a better one to the other one. No, right? And for all we know, you could even be trading, like the other day we had a question about fair value gaps. You could be trading fair value gaps, right? Just pick one and be consistent with it. Become an expert in that one area, and then you are okay, right? So I was saying earlier that if you, for instance, you took this as a break of structure right here, right? So right now you'll be taking this zone here, because if you ask your question, where's the last opposite candle that caused this move down? This is, I believe it should be this one. Yeah, this one here, this high here, right? So you can expect price to come in here and then go back down. You can expect that, right? So just to let us know, there are 1,001 ways, but don't be so fixated on just entries. No, look at the whole thing holistically and say, okay, I'm just going to be trading breakup structures and I'll move with that. Or I'm going to be trading rejection candles and I'll move with that. Or I'll take what's it called now? Market structure shifts and I'll move with that. Okay. If you want to combine the whole three, yes, then you know that, okay. So, well, okay, another lesson for us here. Okay, so if you want to take the whole three, for instance, so you say to yourself that, so you're looking at risk management now. So you say to yourself, okay, I have in a day, I need to determine what is my maximum drawdown in a day. Okay, if you say in a day, my maximum drawdown will be 3%. Okay, so and I'm likely to have maybe 4 setups or 5 setups, right? So you then divide this your 3% by 5. Okay, you divide it by 5 to know how many, since you have 5 trades, you have potential of 5 trades. You now divide that 3% by 5, and then you get maybe 0. For sake of argument, let's just say maybe 0.1 something. Okay, so now if you take that trade, that risk, right, for every trade setup, you just use that same risk percentage. For every trade setup, you use that same risk for trade for each trade. Okay, right. So you take maybe, so for that 3 by 5, that's about 0.6, right? So you go 0.6 for each setup. So this setup will be 0.6. And if this one doesn't work out, that's fine. You know, that is okay. You are still within your total risk management. Okay, beautiful. Let's move faster now to the other charts. Pound Aussie. Oh wow. Okay. Pound Aussie is looking like it's trending downwards. These are lines from before, so but it can be helpful for us too. So this one is even looking more like a, yeah. So it started from here, moved up, came all the way down, then pushed up, then came down and pushed up, came down again. So it's down here. So essentially you can say this is just a big range, right? That is one way you can look at it. This is just a big range. Given that price came all the way down here, but closed back up there. Now it's meandering down this way. Okay. So nothing much here, but you can use, remember what I said, you can use any of those trade setups to take your trades. Let's look at the next one. Oh, now this one is looking a bit clearer. So let's see, this is Euro USD. Price started from top here, up here, came down, went up, came back down, right? It did not break and close below this level, but right now it's giving us a market structure shift here. Okay, you can see a market structure shift right there. Where is that? Because this was the last push down. Okay, so we can see an MSS there. Right, you can see a market structure shift. So what we expect, so this is what price has done overnight. What do you expect? You can expect price to pull back. Let's use the pen. You can expect price to pull back and then perhaps come up to this level here, to the highs there. Okay, that's a possibility. Okay, so let's look at the next one. Pound USD. Okay, this one too has done a similar thing. It's come up from here, come all the way down. It's pulled back down. It's gone down here. Just done like a double bottom there, and then now it's done a shift as well. So what do you expect price to do? I expect some sort of pullback. You can put your stop loss at the lows there, and then see if price will come back to these highs here. Okay, that's a very nice one. Okay, let's look at USD yen. Okay, what did price do overnight? Price pushed up, came to this level, came back down, started trying to pull up, but could not go further, and then it's just come down here. So essentially, this is not a proper trend, right? This is not a proper trend. So I can just mark this as a range and just say to myself, If I see a break and close below this level, I'll be interested in going up. Or if I see a break and close above here, I'll be interested in going short. Okay, beautiful. Do we have any questions? I can see. Oh wow! Can you see what gold has done now? So for those of us who are trading gold, I'm sure if you had seen this, right? If you took this stop loss here, or you took this other one here, wow, that's a big one actually, 400 pips, right? So you'll be in some profits, right? Or if you took the aggressive one, right, somewhere there, so you are almost halfway through, right? So you see, this thing is not a question of which entry you're using. Just stay with one and be consistent with it. Okay. All right, no questions. So we'll be back at 2 in the afternoon, West African time, and then we'll look at the New York session. We'll be glad to have you join us if you can join us at that time. Lovely. See you later. Bye for now.